Welcome back to yet another insight update on the NIO stock. Before we begin, if you are a viewer from the United Kingdom, Netherlands, Germany, Switzerland, or France, you can get a free stock worth up to $100 by simply signing up for Trading 212. Trading 212 is a brilliant platform for investing, and they let you buy or sell stocks for 0% commission. To sign up and get their free stock worth up to $100, you can use the link in the description of this video. Now let's get started. Since a lot of investors in the NIO stock are also new investors, we thought it would be a good idea to first explain and answer the question, what is a stock or share dilution? Share dilution occurs when a company issues new shares in a future round of investment. The issuance of new shares will dilute the percentage of an existing shareholder's ownership in the company, although the number of shares they own remains the same. For example, if a company initially issues 100 shares and shareholder A owns 10 shares, they hold 10% relative ownership in the company. However, if in the second round of investment the company issues a further 100 new shares, shareholder A will now hold 5% relative ownership of the company's new total issued share capital of 200 shares. This is known as share dilution in percentage. Now, coming back to the main topic of the video, Chinese electric car maker NIO has now joined the rush for fundraising among new energy vehicle manufacturers, capitalizing on a tenfold increase in its share price in 2020 to boost its cash coffers. The management of NIO has decided to sell 60 million American depositary shares of the NIO stock in a follow-on offering and has the option to sell another 9 million. Based on its share price of around $45, the car maker could raise as much as $2.7 billion. The NIO stock, as a result, felt a lot of downward pressure on Friday. Rising electric car demand has pushed up the NIO stock this year, prompting them to sell additional shares to fuel their growth. On Wednesday, Chinese rival XPeng Incorporated raised $2.16 billion in an upsized share sale. A week earlier, Li Auto Incorporated sold $1.36 billion of new stock, while industry leader Tesla Incorporated is raising as much as $5 billion in its third stock offering this year. NIO is gearing up to give Tesla a fierce competition in 2021, and this latest capital raise is being believed to be a part of that game plan. Electric car demand is increasing rapidly in China, benefiting Tesla as well as its local competitors, such as NIO and XPeng. Sales of new energy vehicles, which includes electric cars, more than doubled last month to 169,000 units, according to China Passenger Car Association. NIO's share sale adds to what is already a record year for Chinese capital raising on U.S. exchanges, even as relations between the world's two biggest economies are at a low. U.S. equity capital markets are having a blistering end to the year, with billions of dollars of stock being sold through initial public offerings and follow-ons. So, one last thing that a lot of the investors might be asking, is there a need to panic due to this recent share dilution in the NIO stock? The answer is, absolutely not. The dilution is relatively small. NIO is a $50 billion company now, and $2.7 billion only constitutes a small percentage of that as an additional offering. And NIO actually needs this extra cash to compete with its rivals in the coming years, both in China as well as abroad. So, medium to long term, this share dilution is actually a very positive news for the investors in the NIO stock. As always, we thank you for watching this update. If you are new to our channel, we highly recommend that you subscribe to us. We produce updates like these on the Tesla stock as well as the NIO stock very often. Until next time, have a profitable day.